All right, so let's jump right into it today. We're looking at CreditAccess Grameen Ltd's Q3 FY25 results.
Fresh off the press from January 24th, 2025.
Yeah, and we've got a really interesting set of documents to dig into here. So we've got the press release that highlights the key wins and kind of the big picture stuff.
We also have the investor presentation, which is chock full of all the juicy data, all the numbers.
Yeah, and we've got the more formal board meeting letters as well, just to give us that extra level of detail.
Absolutely.
So I guess maybe just to frame this a little bit, what are we trying to understand here? We want to see what these numbers actually tell us about CA Grameen's performance. What strategic moves are they making, and what does all this mean for the future of microfinance in India?
Big question.
Yeah, some big questions.
So I think most of our listeners are probably familiar with CA Grameen. They're a pretty major player in India.
But their reach is, it's really something else. They're the largest NBFC MFI. They specialize in these microloans for women, primarily in rural areas. And we're talking, 16 states, 422 districts.
Yeah, huge. 2,059 branches.
And serving 4.8 million borrowers.
Mm-hmm.
It's incredible.
Yeah, it's amazing.
So let's get into, the kind of the nitty gritty here. Their growth. We look at their AUM, their assets under management, and it saw a 6.1% year-on-year increase, hitting 24,810 crore rupees.
Yeah.
Pretty good, right?
Yeah, not bad at all. And especially impressive considering this actually follows about 8 months of decline.
Decline. That's not something you want to hear usually, right?
Not really, no. But it is a trend worth keeping in mind, especially given the, kind of the broader economic climate we've been seeing.
Yeah, for sure.
So, to see that growth there is pretty impressive.
And even more impressive, they managed to bring in 1.52 lakh new customers this quarter alone.
That's right. And 42% of those are new to credit. So,
wow.
That really speaks to their commitment to financial inclusion, even when things are a little uncertain.
Yeah, absolutely. So clearly they're, growing. But what about their financial health? I think the picture we're seeing here is a little bit mixed, right? So the first 9 months of FY25, they were looking really good. Total income up 17.1% year on year. Operating profits saw a boost, but Q3 kind of threw us a curveball.
Yeah, a bit of a bump in the road.
Yeah, a loss of 99.5 crore rupees. And that's a pretty big swing from the profits they were seeing in previous quarters. So, I imagine some investors might be looking at that and getting a little nervous.
Yeah, of course. And I think that's understandable.
So what's the explanation for this sudden loss?
Well, the company is attributing it to, early risk recognition, being a bit more conservative with their provisioning. So essentially setting aside more money to cover potential loan losses. And they've also accelerated their write-offs, which basically means that they're getting rid of bad loans from their books much faster.
Okay, so that's a lot of financial jargon.
Yeah.
I think for, someone like me who's not deep in the weeds of, accounting every day, break that down for me. Like, what does all this mean for, the average person who's maybe considering CA Grameen as an investment?
Sure. So essentially they're taking a short-term hit,
Okay.
to kind of protect themselves in the future, right? It's almost like reinforcing the foundation of your house before you add another story, It's not you don't see that benefit right away, but, it's good for stability.
So you're saying it's a strategic move, not necessarily a sign of weakness.
Exactly, yeah. And remember, they still have very strong liquidity. So we're talking over 3,222 crore rupees in cash and cash equivalents. Their capital adequacy ratio is also healthy. It sits at 25.9%, and their credit ratings are still strong. So, while that Q3 loss is something to consider, it's definitely not the whole picture.
Okay, that makes me feel a bit better.
Yeah.
But we can't ignore, the elephant in the room here, and that's delinquencies, right? We've seen this spike across the entire microfinance industry since July 2024, and CA Grameen is no exception. So what's going on there?
Yeah, so this is where it gets really interesting. So you see this rise in delinquencies is actually linked to these stricter lending rules that were introduced by the Microfinance Institutions Network, the MFIN.
Right.
And they were designed to curb over-indebtedness, which, is a good thing, right?
Yeah.
But it led to borrowers kind of tightening their belts and maybe cutting back on their loan commitments. And CA Grameen's data actually reflects this. There's been a significant drop in borrowers who are juggling loans from, 4 or more lenders.
It's like a microfinance detox, I guess.
Yeah.
in a way, less debt should be good, right, in the long run. But it does make those short-term numbers maybe look a little worse.
Exactly. Yeah, this deleveraging, it's actually a really positive sign when it comes to, responsible lending. But what does this mean for CA Grameen?
Yeah, what is the impact on them?
So if we look at their collection efficiency, and particularly for like the most prompt repayment category, we call that the X bucket, and that just means loans paid back right on time. It was actually over 99.2% in December.
Wow.
And it's been continuing to improve, into January of 2025, so things seem to be moving in the right direction, even if it's, a little bit slow.
Okay, so there's light at the end of the tunnel, even with these, new MFIN regulations. But, I have to ask, could these rules actually stifle future growth?
Yeah, right.
I mean, that's got to be a concern for investors, right?
Yeah. Absolutely. And some people do see it as a roadblock. But here's where CA Grameen's data kind of tells a different story. So 84% of borrowers who have multiple loans are still making their payments on time.
Okay.
So that suggests these new rules, while impactful, aren't going to, completely cripple their growth.
Okay, so no need to sound the alarm just yet. What's their outlook for the rest of the year? What are they saying?
So they're still projecting around 7 to 8% loan portfolio growth for this fiscal year, FY25. And they're expecting profitability to sort of bounce back by Q2 of FY26.
So weathering the storm and looking ahead. I like it.
Yeah, exactly.
But in a world that's, becoming increasingly digital,
Mm-hmm.
how is CA Grameen adapting? Are they keeping up with, the fintech revolution?
Absolutely. They are actually investing quite heavily in technology, and, both internally and for their customers. And actually, that's where we'll pick up in part two.
Wait, you're going to leave me hanging like that?
Yeah, just a little cliffhanger.
Okay, all right, all right. I'm hooked. So we're going to unpack all that tech stuff in just a bit. But first, I think we need to kind of, open up the hood and look at the engine of CA Grameen's operations.
Let's do it.
See how this whole microfinance machine actually works.
Absolutely.
All right, looking forward to it.
Yeah, me too.
So we've established that CA Grameen is, a pretty tech-forward company.
Yeah, they're definitely embracing the digital side of things.
But before we get into, the nuts and bolts of their digital strategy, I think it's important to understand, the foundation of their operations.
Absolutely. Yeah, you're right. It's easy to get caught up in all the excitement of apps and algorithms and all that.
Yeah.
But, we got to remember that at its core, microfinance is about people.
Exactly. And CA Grameen, they have this really unique approach that starts, right at the grassroots level with something called Kendra meetings.
Right?
Have you ever heard of these?
Yeah, Kendra meetings, it rings a bell, but I could definitely use a refresher.
Yeah. So essentially, these are like small weekly gatherings of borrowers,
Mm-hmm.
usually held in, kind of a central location within a village, like, someone's home or something like that.
Oh, okay. So it's like a microfinance support group almost.
Yeah, right in the heart of the community.
That's cool.
And that sense of community is crucial to their model. So these meetings, they're not just about collecting loan repayments. It's about building relationships, sharing knowledge, providing support.
Yeah, I can see how that would be incredibly valuable, especially for women who might not, have access to traditional banking services or, financial advice.
Exactly. It creates this safe space for borrowers to kind of discuss their challenges, learn from each other's experiences, and, just gain the confidence to manage their finances.
Yeah, it's like a financial safety net, almost woven into the fabric of the community.
Exactly. But how do they manage all these meetings,
Mhm.
right? And the flow of information, I mean, it seems like a logistical nightmare with, almost 4.8 million borrowers.
Right. Yeah, it's a huge operation.
So that's where technology comes in, but not in the way you might think.
Hmm.
Instead of relying on like complex algorithms or a fancy AI, they've equipped their field staff, their loan officers and branch managers with handheld tablets.
Interesting. So no more dusty ledgers or piles of paperwork.
Well, not exactly.
Okay.
These tablets allow them to, kind of digitize all the essential processes,
Yeah.
right?
Yeah.
So we're talking collecting KYC details, running credit bureau checks, dispersing loans, recording repayments.
Wow, that's impressive.
It's all done in real time right there at those Kendra meetings.
That's brilliant. Not only does it streamline the whole process, but it also minimizes errors, enhances transparency, and I'm guessing it allows them to collect a ton of valuable data.
Yeah, you're absolutely right.
Data is gold.
Data is gold, especially in the financial world.
Yep.
So by digitizing all these processes, CA Grameen can track repayment patterns, identify potential risks, and really fine-tune their strategies.
Right, yeah.
Gives them this much clearer picture of what's actually happening on the ground.
So it's not just about being tech savvy. It's about using technology to make their entire operation, more efficient, more transparent, more data-driven.
Exactly. Now let's talk a little bit about how they structure their teams. So each Kendra typically has like a dedicated loan officer who kind of acts as the primary point of contact for the borrowers.
Okay, so they're like the friendly face of CA Grameen almost, building those crucial relationships within the community.
Exactly. And then you have like branch managers who oversee multiple Kendras within a specific area.
Okay.
And then above them, you've got like area managers and then, regional or divisional managers and finally like, zonal managers or state heads.
It's like a whole hierarchy.
Yeah, it's a layered system, but it ensures, there's oversight and accountability at every level.
So it's like a pyramid almost with those Kendra meetings and the borrowers forming the base and then, each level of management providing that guidance and support.
A great analogy.
I like it.
And this whole structure, it goes hand in hand with their commitment to risk management.
Right.
Because they're not just about, giving out loans, they're about lending responsibly.
Right, right. Especially when you're dealing with borrowers who might be new to the world of finance. You gotta be careful.
Absolutely.
Make sure they're not getting in over their heads.
So how do they approach risk management?
Yeah, what's their secret sauce?
Well, they have this multi-pronged strategy, right? And it starts with incredibly thorough customer due diligence. So they conduct, comprehensive credit bureau checks on all earning members of a potential borrower's family.
Wow, so they're not just looking at an individual's financial situation in isolation. They're taking like a holistic view, considering the whole family's financial picture.
That's right. It's about understanding the broader context, and ensuring that the borrower has the capacity to repay the loan without, putting their family's well-being at risk.
Right. Makes sense.
And this is where their unique joint liability group model comes in, or JLG for short.
Yes, the JLG model. We touched upon it briefly before,
Yeah.
but I'd love to hear more about how that works in practice.
So it's a fascinating system that kind of leverages the power of community, right? So when borrowers form a joint liability group, they're essentially vouching for each other.
Okay, so if one member defaults, the others are responsible for covering the repayment. That sounds like a lot of pressure.
It is, but it also creates this powerful incentive for everyone to, kind of support each other and make sure everyone repays their loans on time.
So it's like a built-in safety net almost, based on trust and mutual accountability. But what happens if like a whole group defaults?
That's a good question. It does happen occasionally.
Right.
And CA Grameen has, mechanisms in place to deal with those situations. But the JLG model has been remarkably effective in, keeping those repayment rates high.
Okay, so it's a calculated risk, but one that's paying off for them.
Exactly. But they don't, just rely on the JLG model for risk management, right? They also have this robust customer engagement strategy.
Okay.
With those regular Kendra meetings we talked about, they act as kind of a vital early warning system.
Right. So it's about keeping a close eye on things, identifying potential issues before they become, major problems.
Exactly. And this is reinforced by their employee incentive structure, which is quite unique.
Oh, how so?
So unlike some microfinance institutions that kind of incentivize employees based on, loan disbursement volume, CA Grameen takes a different approach.
So their employees aren't just rewarded for, giving out more and more loans.
Right. Their incentives are actually linked to factors like, the number of customers they service, the quality of their service, their adherence to all the proper processes.
That's really interesting.
So it really aligns everyone's interest towards, sustainable growth and customer well-being.
It makes their incentives match their mission almost.
Exactly. And they also have this strict employee rotation policy. So loan officers are rotated every 6 months, branch managers every 3 years.
Oh, wow. That's interesting.
It helps prevent complacency, keeps things fresh.
Keeps people on their toes.
Exactly. It's like cross-training on a company-wide scale.
Yeah, it helps to build a more adaptable and resilient workforce.
You got it. And they're very strategic about where they choose to expand. So they use this contiguous district-based approach.
Contiguous, that's a fancy word. What does that mean in plain English?
So basically, they expand into new districts that are adjacent to their existing areas of operation. It's like building outward from a strong core, gradually expanding their reach, while minimizing their exposure to any single region.
So it's like a controlled burn, spreading their influence, but maintaining that strong foundation.
A perfect analogy. And they primarily focus on these rural markets, which are often, underserved by traditional financial institutions.
Right. Yeah, it makes sense to go where the need is greatest.
Exactly. But why prioritize those rural areas? Wouldn't it be easier and potentially more profitable to, focus on those urban centers?
Yeah, that's a good question.
So it's a strategic decision based on a few factors, right? First, there's this huge unmet demand for financial services in these rural areas.
Hmm.
And second, rural communities often have these strong social bonds and a culture of mutual support.
Which aligns perfectly with the JLG model.
Exactly. It's like they found a market where their unique approach really shines.
Yep.
And third, operating in those rural areas can actually be less competitive
Oh, interesting.
than in urban centers. So this allows them to kind of build these deeper relationships with their customers and establish a really strong presence.
So they're filling a critical gap and building a loyal customer base at the same time.
Exactly. But targeting those new-to-credit customers, it also comes with, higher inherent risks.
Right. Of course, lending to people who haven't borrowed before is always going to be a bit riskier.
So that's where their rigorous risk management framework really comes into play, right?
Yeah.
They recognize that bringing financial inclusion to, those who've never had access before requires extra care and attention.
So it's not just about giving out loans, it's about educating those borrowers, setting them up for success.
You've hit the nail on the head. They want to empower these new customers, not burden them with, debt they can't handle.
Right, right. It's about responsible lending for sure.
Okay, so you've been patiently waiting to delve into their technology, so let's get into that.
Yes, finally. We've talked about, how they're using those tablets in the field, but what about their bigger picture tech strategy? How are they staying ahead of the curve in this, fintech world?
Well, they've got some exciting plans. They're investing in what's called an enterprise service bus and a microservices architecture.
Oh, okay. Those are some big words. Don't let the jargon scare you. It basically means they're making their systems more, flexible and scalable.
Or agile.
Yeah.
But for, the average borrower, what does that mean? How will it impact their experience?
That's a good question. Yeah.
So it means that CA Grameen will be able to offer, even more innovative and personalized financial solutions.
Okay. Like what? Give me an example.
Think customized loan products, tailored to individual needs and financial goals.
So they're moving beyond that one-size-fits-all approach.
Exactly. And they're also focusing on, enhancing their existing mobile apps, both for their employees and their customers.
Okay. And what kind of enhancements are we talking about here?
So they're adding features like, automated data entry through image recognition, which will save everyone, time and hassle.
Okay. So less paperwork, more automation. I like it.
And they're also creating kind of a single platform for all their apps,
Okay.
which will make it much easier for customers to, manage their accounts, access different services.
So streamlining, simplifying, hallmarks of a good user experience.
Exactly. And they're not stopping there. They're expanding their workflow capabilities to automate even more processes.
Wow. Sounds like they're really going all in on this digital transformation.
Yeah. And it frees up their employees to focus on building relationships, providing that personalized support.
Right. So it's about leveraging technology to enhance the human touch, not replace it.
Exactly. And they're actively exploring partnerships with, fintech players to implement even more, cutting-edge digital solutions.
Yeah. Partnerships are key in this rapidly evolving landscape.
Absolutely. So they're really embracing innovation, pushing the boundaries of, what's possible in this microfinance space.
Yeah. It's exciting to see them, really pushing the envelope.
Yeah. But behind all this technology, all this innovation, what's the fundamental philosophy driving their approach to risk management?
That's a good question.
At its core, it's about recognizing that microfinance is, first and foremost, a collection business.
Okay, that's an interesting way to put it. So it's not just about giving out loans, it's about making sure those loans are repaid.
Precisely. And that's why they integrate risk management into, every single operating process, from the very first customer interaction to that final loan repayment.
Okay.
They see it as this continuous cycle,
Yeah.
and they're constantly, fine-tuning their strategies to make sure it's effective.
Yeah, so it's not just about mitigating risk, it's about building a really robust system that
Yes,
can, weather any storm and continue to serve its customers even when faced with, unforeseen challenges.
exactly. And this brings us to, another crucial aspect of CA Grameen's success, and that's their strong parentage and their robust shareholder base.
Okay, let's talk about the power behind the throne. Who are the big players backing CA Grameen?
So their promoter group is CreditAccess India BV, also known as CAI, and they're a multinational company specializing in, micro and small enterprise financing.
So they're not just a silent investor, they're actively involved in shaping the company's direction.
Absolutely. CAI has been a steadfast supporter of CA Grameen, providing both financial and strategic guidance over the years.
Okay, that's good to know.
And CA Grameen also boasts a very diverse shareholder base, over 273 shareholders,
Wow.
including, big names like Olympus ACF, PLTD, the Asian Development Bank, and Asia Impact Invest SA.
So it's a mix of big players and, maybe smaller investors who all believe in the company's mission.
That's a great sign. It speaks volumes about their credibility and their ability to attract a wide range of investors.
For sure, yeah.
But what's particularly noteworthy about, CAI's involvement?
Yeah, why are they so special?
Well, CAI has demonstrated, their unwavering faith in CA Grameen's business model on multiple occasions. So, for example, back in FY17 during the demonetization period in India,
All right.
when many businesses were struggling, CAI actually infused 550 crore rupees into CA Grameen,
Wow.
providing crucial support during a pretty turbulent time.
That's a serious vote of confidence.
Exactly. It shows they're in it for the long haul.
Right.
And they've continued to, invest in CA Grameen through multiple rounds of, capital funding and secondary purchases.
So they're like the wise, experienced mentor, kind of guiding CA Grameen on its journey.
Exactly. And that brings us to another important question.
Yeah.
Who are the people at the helm steering this ship?
Yeah, who are the captains of this microfinance vessel?
So CA Grameen has this really impressive management team with decades of experience, across the banking and finance industries.
Okay, give us the rundown. Who are the key players?
So at the top, you have, Mr. Udaya Kumar Habar, the managing director, and Mr. Ganesh Narayanan, the chief executive officer.
Okay.
And they're both, seasoned veterans with a deep understanding of the microfinance landscape.
All right, sounds like they know what they're doing.
And then you've got, Mr. Garaj K.S. Rao, the chief operating officer.
Okay.
He's responsible for the day-to-day running of the business. And then you've got Mr. Faraz Anam, the chief risk officer, who keeps a close eye on, all things risk-related.
It's like they've assembled this all-star team of microfinance superheroes.
And let's not forget Mr. Nilesh Dalvi, the chief financial officer, responsible for keeping the books balanced.
Right.
And Mr. Sudesh Putran, the chief technology officer, driving all those, tech innovations we talked about earlier.
So they've got the leadership, the vision, and the financial backing to succeed. But what about, the people on the ground, the ones interacting with those customers every day?
So that's another area where CA Grameen really shines. They place a huge emphasis on hiring and developing their field staff, making sure they have a deep understanding of, the rural market and a genuine passion for empowering their customers.
Yeah, so it's not just about crunching numbers, it's about building relationships and making a real difference.
Exactly. And this is reflected in their, remarkably high borrower retention rate, 88%,
Wow, that's impressive.
which is a clear indication of, customer satisfaction and loyalty.
Yeah, for sure.
So let's dive a bit deeper into their product offerings.
Okay.
We know they specialize in microloans, but what kind of loans are we talking about?
Yeah, give us the details.
So they have this diverse product suite designed to meet, the various needs of their customers. And their flagship product is the Group Income Generation Loan, or IGL for short.
Okay, break that down for me. What's the purpose of an IGL?
So it's essentially a loan that, enables borrowers to invest in their businesses
Okay.
or pursue income-enhancing activities.
So giving people the financial tools they need to grow their livelihoods.
Exactly. The ticket size can range from, 5,000 rupees to 150,000 rupees.
Yeah, okay, so quite a range there.
Yeah. And the tenure can be anywhere from 12 to 36 months.
Okay. So it's quite flexible.
They also offer, group home improvement loans,
Okay.
which are designed to, as you might guess, help borrowers improve their living conditions.
So things like water connections, sanitation, home extensions.
Yes, and those loans typically have a, ticket size of 5,000 to 20,000 rupees
Okay.
and a tenure of 12 to 24 months.
So it's about making those essential investments that can, really improve their quality of life.
Exactly. And they also have group family welfare loans. So for things like festivals, medical expenses, education, livelihood improvement.
Those sound like lifelines for unexpected events or important
They
milestones.
are. And those loans are, capped at 20,000 rupees and have a shorter tenure of, just 3 to 12 months.
Okay, so they've got all the bases covered. They've thought of everything.
But wait, there's more.
Oh, there's more. Come on. What else do they have?
They also have retail finance offerings.
Retail finance. Okay, so they're branching out.
So they've expanded their portfolio to include, individual unsecured loans, gold loans, two-wheeler loans, loans against property, even affordable housing loans.
So they're not just about microloans anymore. They're becoming a one-stop shop for a wider range of financial needs.
That's a great way to put it.
I like it.
And these, retail finance products allow them to cater to a broader customer base, including those who might need larger loan amounts or longer repayment terms.
So they're evolving with their customers, meeting them where they are in their financial journeys.
Precisely. And this commitment to, customer centricity, it's a core part of their philosophy. They understand that, the best way to mitigate risk is to build those strong, lasting relationships with their borrowers based on trust, transparency, and a shared commitment to success.
Yeah, it's a win-win for everyone involved.
Exactly. But let's not forget that, CA Grameen operates within this larger context. The dynamic and often unpredictable world of, the Indian microfinance industry.
Right. Yeah, it's a tough industry to be in.
So their track record speaks for itself. They've consistently demonstrated, resilience and adaptability, even in the face of some pretty significant challenges.
Okay, give us some examples. How have they, weathered past storms?
Well, let's go back to, FY17 during that demonetization period, as you recall. The Indian government kind of suddenly removed those high-denomination banknotes from circulation.
Right, right. Yeah, that was a big deal.
Caused widespread disruption
Yeah,
to the
yeah,
economy.
for sure.
And many microfinance institutions struggled to cope. But CA Grameen, thanks to their robust risk management practices and the strong support of their, promoter group, they actually navigated that period relatively smoothly.
So they proved that they could, handle a curveball. What other challenges have they faced?
Well, in FY19, there were major floods in several parts of India, coupled with a, kind of a general crisis in the NBFC sector.
Okay.
And again, CA Grameen demonstrated their resilience and their ability to adapt to changing circumstances.
So they've got like a microfinance emergency kit ready for any situation.
Exactly, but I have a feeling there's one more major challenge we need to talk about, and that's, the COVID-19 pandemic.
Oh, right. Yeah, that was a global crisis that tested, even the most robust businesses.
So how did CA Grameen fare during, those turbulent times?
Yeah, how did they handle the pandemic?
Well, like most businesses, they definitely felt the impact. So in FY21, during the, first wave of the pandemic, their profits took a hit as, lockdowns and economic uncertainty affected those repayment rates.
Right. So even they weren't immune to the global slowdown.
No, but here's the key takeaway. They bounced back remarkably quickly.
Oh, okay.
So by FY22, their profitability had already recovered to pre-pandemic levels.
Wow, that's impressive.
So it really showcases, their adaptability and their ability to learn from, challenging experiences.
So they're resilient, they're adaptable, they're quick learners. What else could you ask for?
Exactly. But let's zoom out for a second and look at, the bigger picture. What does a CA Grameen's performance over, say, the past 8 years tell us about their overall approach to navigating, these economic cycles?
Yeah, what's the big picture takeaway here?
It tells us that they have a proven track record of, delivering consistent, sustainable growth, even during periods of, significant volatility. So their average ROA over the past 8 years has been a healthy 3.6%, and their average ROE has been an impressive 15%.
So those are some solid numbers. They clearly know how to how to navigate the ups and downs and come out stronger on the other side.
Exactly. It's clear that CA Grameen is, more than just a microfinance company. They're a model of resilience, innovation, and social impact.
Yeah, they're really setting the bar high.
But their story is, far from over. They're constantly pushing boundaries, embracing new technologies, and evolving their approach to, meet the ever-changing needs of their customers.
It's inspiring to see a company that's so, you know, dedicated to their mission and so committed to making a real difference in the world.
Absolutely. It's inspiring to see a company that's so, dedicated to their mission and so committed to making a real difference in the world.
It really is, and they're setting a fantastic example for others to follow in the industry.
Absolutely. But, as we kind of wrap up this deep dive, I want to circle back to something you mentioned earlier. Those potential ripple effects of empowering women financially.
Right.
It's a topic that deserves, a lot more attention, I think.
Hmm. Yeah.
We've focused a lot on the positive impacts, but there could be some unforeseen consequences as well.
Oh, absolutely. And I think it's something that we need to be very mindful of as, the microfinance sector continues to grow.
Yeah, because as women gain more, financial independence, it's bound to shift those traditional power dynamics within, families and communities.
Right. I mean, think about it. Women having more control over their finances could influence, everything from household spending decisions to educational opportunities for their children and even their own social standing.
Yeah, it's like a social experiment unfolding in real time
It really is.
with potentially, far-reaching implications.
Absolutely. And it's not just about the women themselves either. It could have a big impact on men as well, potentially leading them to redefine their roles and responsibilities within the family unit.
Yeah.
It's a fascinating dynamic and one that I am sure will continue to evolve as, more and more women gain access to these financial services.
Absolutely. And it really kind of highlights, that broader impact of microfinance, right?
Sure.
It's not just about individual empowerment. It's about potentially, reshaping these social structures and creating a more equitable society for everyone.
Exactly. It's about, challenging those traditional norms and opening up these new possibilities for everyone involved.
It really is. And it's a reminder that, the journey of financial inclusion, it's far from over.
Yeah, we still got a long way to go.
There's still a lot of work to be done, both in India and around the world.
For sure, but companies like CA Grameen give me hope. They're proving that it's possible to create a model that's both financially sustainable and socially impactful.
Yeah. And they're inspiring others to, follow in their footsteps, pushing the boundaries of what's possible and, creating that more just and equitable world for everyone.
Absolutely, and that's what makes their story so compelling. It's proof that finance, when used responsibly and ethically, can be this incredibly powerful tool for positive social change.
Well said. Well said. But before we, sign off, I want to leave our listeners with a final thought. We've talked a lot about CA Grameen's, commitment to empowering women, but I'm curious, what about the men in these communities? How are they reacting to this, this shift in financial power?
That is a fascinating question, and it's one that I honestly don't have a clear answer to, but I think it's something that deserves a lot more attention and research, because as women gain this financial independence, it's bound to have those ripple effects, on family dynamics, social norms, even the broader economy.
It's a social experiment,
Yeah.
almost on a massive scale.
Hmm.
And it'll be fascinating to see how, these changes play out over time.
Absolutely. And I think it's a great reminder that microfinance, it's not just about money, it's about social transformation, it's about challenging that status quo and creating a more just and equitable world for everyone.
Well said. And on that note, we'll leave you to ponder the implications of this, financial revolution that we've been talking about today. Thanks for joining us on this deep dive into the fascinating world of CA Grameen. Until next time, keep learning, keep exploring, and keep believing in the power of finance to change the world.